Straight up to the Brent crude prices, which are trading above $98 per barrel on a technical rebound and ahead of data on U.S. inventories that could show a drop for a third straight week. This will help ease concerns over high crude stocks in the world's largest oil consumer. But another round of cuts by the U.S. Energy Information Administration to its world oil growth demand forecast for 2012-13 has limited much of the gains in the prices there. The Brent crude prices remain volatile, and let's head on to know on where the prices could be headed for that. And for that, let's go across to our guest for the day today. Michael Hewson from CMC Markets market analyst now joins us. Hewson, what's your sense on where the prices could be headed in the very near term?
Yeah, I think so, but I also think there are some technical aspects that we need to look at with respect to the Brent price. And particularly a double top breakout that we saw at the beginning of June. We broke below that $102 mark, and for me that was quite significant and did precipitate a very, very sharp fall down to around about $89 a barrel in the middle of June, which was the 200-week moving average. Now, unless we get back above that $102 mark, then I think we could potentially hit as low as $78 a barrel, given the bleak global growth outlook that the OECD talked about yesterday.
Michael, also 78 barrels per dollar does look a bit stretched from where we are right now. Where do you see the prices headed in the near term?
It does indeed, but I think we need to look in the context of the growth outlook going forward, and it's not particularly good. Yes, we bought ourselves a little bit of time with respect to what's going on in Europe and this Spanish bank bailout, but until such times as EU policymakers deal with the underlying debt and solvency issue, growth, I think, in Europe is going to lag for quite some time to come.
All right, Michael, we'll let you go at that. So that's the view coming in from the CMC markets. They are expecting the Brent crude prices to decline to $78 per barrel from the current $99 from where it's trading. But it's the spot gold prices which also are trading firm after posting its biggest one-day decline since late June. But the gains are expected to be reined in as the dollar continues to outstrip bullion as a preferred destiny for safety. Let's get the gold prices on your screen first, where we have seen them decline 1.4% in the markets yesterday. It has declined 0.5% today on MCX itself today. But markets, of course, will be watching out for the FOMC minutes today in the evening to get further direction on what could be happening in sense of that stimulus, which the gold prices has been taking some strength from. Let's also get in Ram Pitre. He's head research ITI, and Vijay Bambwani, author and CEO BSPLindia.com. They both join us in Mumbai. Ram, hi, welcome to the show. Let's start with the gold prices first and the kind of decline that we have seen and the kind of jitteriness that the gold prices have ahead of the FOMC minutes today in the evening. What's your sense?
As rightly mentioned, FOMC meeting and trade data is likely to come at 6 o'clock today. Overall, last time we met, I have mentioned that gold are likely to go further downside, and as long as it remains above $1,625 in international market, and it has touched 1,624 or something, and it has fallen to almost yesterday to around $1,568 or so. So looks like it is on the upside, it is capped at around $1,625, and on downside almost 1,562. The either side breakout will give the clear direction, but I'll more towards the downside. I personally feel that we are heading towards, as I mentioned earlier, $1,500 and $1,400 in the long term.
Ram, you're bearish on gold, and do you think that could spill over for silver as well?
Definitely. I'm again silver also. We have seen a low of almost $26.15 on international market, and bounced almost $1.5 to $2 around 28.40, 28.50 level. And again yesterday it has fallen to below $27 and closed below $27. Suggests that one more attempt will likely to be in the near future to around 25.25 and 24.04 is the level which I have in my mind. Unless and until we touch that level, I don't think silver can bounce back drastically on the international market.
Vijay, getting you in the conversation, what's your sense on the precious metal prices ahead of FOMC? We've seen jitteriness, some bit of a buying in the international markets, but what's your sense?
Manisha, should there be no kind of a stimulus or capital infusion into the economy, I think bullion prices might just decline a little bit. But overall, I think after the elections in the US are done, I expect a bounce in both gold and silver, and possibly in percentage terms higher in silver than gold, because gold has been scaling up where silver has been consolidating. As far as levels are concerned, I would watch 29,150 or 29,200 levels on the MCX. As long as gold is managing to stay above that, it might just the bulls might just try and hold their own. But 29,800 remains a very, very stiff resistance. In case of silver, I think a breakout will be signaled only after the price closes above the 54,750 levels, which is a good 2,200 plus rupees higher from here. So till then, silver will remain under pressure. The possibility of 51,250 or 51,500 cannot be ruled out. So in the absolute near term, I think buying is not justified. But if you're somebody who's doing an SIP in the physical or a gold in ETF, I think that can continue very well.
Physical, cautious in futures, but of course the long term is still bullish in precious metals. Ram, what's your sense in case of crude prices? There have been those reports of Iraq taking over Iran when it comes to output, and there are those markets report of lower imports in China this time around, lower inventories in US as well. Do you think all of those factors could actually support the prices?
Actually, it is in priced in on the present market condition. Overall, like lastly, I mean, last week I have mentioned that 76.28 is the crucial level. It has come down to almost $77.28 on NYMEX, and it held very well, and it bounced back to almost $10 to around 88.98. It's almost 89. The $89 is very, very important on international market. But as long as it remains below that level on a closing basis, the pressure definitely on the downside. But break and close above that level, we might see the bottom and we might go higher. But till as of now, on an intraday basis, maybe at a lower level because of the inventory around 46 in a domestic market, around 46.60, 46.80. If it comes, we can buy with a stop loss of 46.20. For again target of 47.60, 47.80. So it's a 47.48 level for in the New York market.
Ram, also what's your sense in case of base metal prices? The Chinese data again has been on the weaker side. The dollar index is pretty high. Euro trading around 2-year lows. Do you think all these factors would weigh onto the sector?
Yeah, definitely the euro crisis is likely to continue, and I am seeing another 100 points lower on euro to around 1.2135 to even 1.18176. If that is in mind, the dollar definitely likely to rally, and that will put a pressure on base metal pack. Only the rupee factor is supporting the prices in domestic market in most of the either gold, silver or base metal pack. So that rupee is stabilized to around 54, 55, 50, 55 level. Then definitely this pressure will be a little eased, and base metal pack likely to come down drastically.
Vijay, what's your sense in case of base metal prices?
Manisha, I've been recommending shorts on aluminium and nickel, and nickel has been particularly satisfactory. So that tells me that, and of course, aluminium also hasn't really been able to hold its own. It's kissing the 105 levels and attempting weak bounces from here. Copper is unable to go past the 432, 434 levels, which I advocated as a breakout. Nickel and, lead and zinc are unable to go above the 107 and 110 levels respectively. So my guess is they're headed lower. In terms of fresh trades, I think I would, for a change, want to short below certain thresholds. Now, the aluminium mini futures in July, I would short below the 104.85. I've deliberately chosen the mini futures because volatility can just step up once the psychological barrier of 105 has been violated. So 104.85 or below, I would short the July mini. I would hold that with a stop loss at 105.5, and I would expect to book profits at 104. Should 104 be violated with force, I don't mind increasing my exposure into the regular lots and then going hammer and tongs on shorting aluminium. In that case, my guess is aluminium would go to 102 or 102.5. I think aluminium would be the trade I would look at because the others are beaten down, especially nickel, and there might just be a little bit of a pullback before we can hammer it again. So tomorrow's another day as far as nickel is concerned.
Okay, and quick word on aluminum from you, Ram, as well, because we've seen prices decline in the markets there, but there also is a Goldman Sachs report which advises a buy for aluminum for a 15% of an upside till September. How would you read that?
Looks like it is on a consolidation stage, and it looks like I have not seen a sudden spurt in the chart, especially on the aluminum side. But compared to other base metal pack, definitely aluminum slightly weaker than base metal copper and nickel. So I'll go shorting the aluminum at higher levels.
All right, point taken. Thank you so much, Ram, for joining us with your sense on all of those commodities.